Hello and welcome to Trading the Trend. My name is James Boyd. We welcome all of you here today. We got Michael Fairborn in the chat. We welcome him, fellow instructor. And this is your first time here. Welcome, returning user. We welcome you again. Quick reminder: this webcast will be same time, same station, same instructor, yours truly. Okay, for 2025. So no change here on this class. We're trying to make sure that with each class we let you know if there are going to be any changes, and we always make changes at the beginning of the year. And so we're trying to remind you of that. Now, just real quick as we get started, today's focus, I've had some questions on exiting. And today I want to talk about exiting. Now, it's not going to be the whole time, but I want to kind of be very thorough and practice what we talk about here today. So if you've ever had the question, geez, when might I consider selling? This webcast is for you today. I would recommend that you don't watch this one time. You watch it 2, 3, 4, 5 times. And the proof that you really understand what we talk about is that you can go to your paper money account and execute the game plan that we're talking about here today. Now, I'll show you 2 variations of that, and you get to pick which one you want to do. Now, just real quick as we get started, remember when we bring up stock, but maybe option examples, options can carry a high level risk, not suitable for all investors. Also understand that this webcast is for general informational purposes only. Also, we will be using the Paper Money software application. And also, when we talk about investing, all investing involves risk, including loss of principal. And when we talk about options, remember the option Greeks remember they measure sensitivity to something, okay? And we'll talk about that here more. And also today, as I mentioned before, we are going to talk about selling, okay? Just very point blank today, selling. Now, I want to kind of start with a chart just real quick. And the moving averages we see on the chart, that's a 20-period moving average, and this is a 10-period moving average, okay? Now, I want you to kind of think about this. When the 20-period moving average is this red color, and it's this red color, and this is this red color, what you're going to kind of notice is it just kind of like the trend isn't very good, okay? Now, this is one of the first things I learned in investing. We talked about a 30-period moving average, same point though, no change besides time frame in terms of the length of time you're using on the moving average. So whether it's 20 or 30, you could use either or. Moral of the story is when that 20-period moving average is down, this is when the investor probably says, I wish I didn't own it. I wish I didn't own it, okay? They might rather be in cash at that time versus maybe Apple because the trend isn't that great, okay? Now, you got to remember cash is a position, okay? So if we get, let's say, for example, given the price below the 20, okay, the investor might say, James, I'd rather have cash than, let's say, Apple, okay? And that might make sense because why might the investor, I mean, if they be in cash, they're not losing money. If they're holding stocks when the 20-period moving average is down, they're giving back unrealized profits or they're down on their capital. So one of the kind of major points we're talking about so far is if that 20-period moving average is down, the trend, and we use the 20-period for trend, okay? So if that 20-period moving average is red, okay, tells us something about trend. You don't have a trend. This class is called Trading the Trend. When might the investor not trade the trend or be in the trend? When that 20-period moving average is red, okay? Point blank. Now, here's the deal. When does that turn, though? When does the investor maybe want to consider to get in? I just said, if that 20-period moving average is red, maybe not. If the 20-period moving average goes green, that might give the investors the idea that, hey, maybe the trend is changing. Now, this trend didn't last very long. And you're going to see that 20-period moving average went red again. And then what you're going to see is, for example, it didn't go very bullish for a long period of time again. And those might have been a break even and a losing trade, most likely. This might have been break even. I think this would be a loss, okay? But what you're going to notice is you're trying to only put the capital to work if you have the trend in your favor. So if you said, I know nothing about markets at all, the first thing I want you to take away is we are trying to invest when the 20-period moving average is green. The end. Okay? That's telling us something about trend. If that 20-period moving average is not red, if it's not green and it's red, the investor is probably thinking more about selling it, okay, or selling some of it and trying to be more in a cash position or trying to find something else that is trending better. Now, sometimes trends are not always equal. If the investor, for example, did not get in the next time, this is not unusual. You're going to see that the very next time after they got their feelings hurt, probably on a losing position, the very next time this went green on the 20-period moving average, it was bombs away to the upside. Ladies and gentlemen, if you're going to be a good trend trader or a swing trader, you better get kind of mentally tough that not all positions are going to work, okay? And that's why kind of what you're willing to risk is so important. If you feel like I can't get in that third time when I broke even and lost, I can't take that next trade, probably tells you you're risking too much, okay? And the biggest actually thing is that next one was the big one, okay? But you don't know the future, okay? Now, what I want to do is I want to kind of take with what we've talked about so far, and I want to go back to a page that I think is kind of important, okay? The page that I want to kind of, for example, share is this monitor page, okay? So if we were going to kind of make buying and selling decisions, okay, here we're talking about selling, we're going to use these column headings. Now, these column headings, I'm going to kind of asterisk the ones we're going to look at, and we're going to look at these ones first, okay? The trend, you know what that is. That's telling us where the stock is in relationship to the moving averages, okay? Now, what you're going to notice is what trends are we the most concerned about? Well, if we're talking about something that could be up near a target, that's trend 4. That's a stock that, for example, is above both moving averages that could be up near a target or resistance. Now, would you want to sell a stock that was up near a target potentially and or resistance? Is that something that you would want to know? My gosh, I mean, 4. If we saw 4, trend 4, the investor is probably thinking, is there an opportunity, question mark, to take some money? It hasn't pulled back yet. Now, if all of a sudden we get trend 5, that means the price has slipped down below the 10-period moving average. Now, what would you rather do? Would you rather sell a stock when it's in trend 4, okay, like IBM, or would you say, no, what I really wanted to do is I want to get a trend 5 and I want to let it drop first and give back some unrealized profits and lose some potential capital. I want my stocks to drop before I get out. Well, maybe you're a longer term trend trader. You're okay with that. Many investors might say, James, I just don't like that question, okay, because it rubs me the wrong way. So if we're talking about selling, the goal is to sell in trend 4 at the target near resistance. 5. If we all of a sudden say, James, I didn't go to the target, we ain't at resistance, and the stock just starts to drop, we're concerned in trend 5. Where do we have that? Right there. Where do we have that? Right there. So all of a sudden, I'm now concerned that 2 stocks that we own, they're starting to drop. Okay? And we haven't even looked at the chart yet, but I'm concerned about these IBM, that one, and I'm also concerned about this one. Because remember, if we fall down below the 10-day moving average, we're losing momentum, and the shorter term moving average should be red. Okay? Now, if we're late, and I'm going to kind of write this here, if we're probably late or the stock has fallen hard, it's when the price is below the 10, 20-period moving average. Okay? So what are some examples of that? ALB. And you're going to see that that's the one right there that is trend number 1 below both moving averages. Now, here's the point. If you wait to sell until you get a 1, you're waiting for some serious confirmation, okay? So if you sell your stocks every time the stock is below the 10 and the 20, you probably didn't have a stop, or you're probably just playing the longer term trends. So if you said to me and said, James, I don't have that trend, even though it's on my X page, okay? So let me give you this right here. And I want to make sure we're all on the same page because this is really going to go back to the homework, okay? So this, what I just sent you in the chat, remember scripts are not guaranteed for accuracy or timing, okay? We're going to go to the very top right, set up, open shared item. It's not too bad, right? And then all of a sudden we're going to do a shared item URL. You're just going to copy and paste it. So just copy and paste, okay? Go to setup at the top right, click on the gear where it says setup, okay? And if we do that, open shared item, just copy and paste. We'll click on preview, and then we're just going to label that trend, okay? Now, when we do that, if you say, James, my page does not look like yours, I want it to, and I would like it to do as well. You just want to go over here to the right-hand side. If you said, James, mine says old layout, mine looks like this. The new layout, these three lines over here to the right, click on new layout. And what you're going to see is you can have groupings or categorize your positions by however you want. We categorize our positions by what type of strategies they are. Okay? Now, so first thing is I want to imagine that I have a job and the person tells me, I'll pay you $100,000 a year. But for example, you have to sell on 4, you have to sell on 5, and if you sell on 1, you get a diminished pay, okay? Now you might think, well, that's kind of an odd analogy. I don't know, is it? Have you ever noticed that when you wait to sell that you kind of short-sheeted yourself? You ever realize that you were late in selling and you maybe potentially hurt yourself? So I'm not sure if the analogy is really that stretched. The biggest actually thing is we also want to kind of think about who is the CEO of your money? Who's the CFO of your money? You are, okay? So you are kind of like wanting to hold to your rule set. Now, remember I said the goal is we're trying to sell in 1. What I'm going to do in this case is we got a 225 long call with 8 days left. So what I want to do is I want to prove proficiency that I understand what I just said, and I want to prove it. So I'm going to go look for anything that really has 4. And what you're now going to notice is we have 8 days remaining, and it's a long call. Now, why might we say that this would be a good time to sell anyway? Well, it'd probably be a good time to sell anyway because we're inside 10 days. And if we have the stock above the strike price, okay, and we hold all the way to expiration, this long call can morph into shares. Do you want the shares? Let's say the investor says, I don't. Well, how do you exit? Well, you right-click on it, create closing order, and then say sell, okay? Now, I want to kind of bring something else up just for a moment, okay? Now, you're going to notice that right to the right of this, you're going to see that it says 10 whole C for the 10-day moving average. And what it's doing is this red background, okay, shows the color of the moving average. We pulled up the chart. And that number in the box is telling us how many days has the moving average been down. Down for 3 days. The 20-period moving average, okay, this, on IBM, it's been down for 2 days. So let's kind of marry these two ideas together. Number one is we're looking for trend. Absolutely, okay? Number two, and by the way, the trend might influence what strategy you're choosing as well. But if we're talking about timing, well, timing would actually be when the moving averages go red and you're like the first day, second or third day, okay? Now let me show you what this chart looks like, okay? So if we go to IBM for just a second and say, why does it show 2 to 3 days? So when I go look at this daily chart, it should really show me in the last 2-3 days, 1 day, 2 day, 3 day, that really the shorter term moving average for 3 days has been down. Now remember, go back to the initial question I asked you before. When do you wish you owned the stocks? You wish you owned the stocks when the moving averages were green. You didn't really probably want to own the stocks when the moving averages were red. And so what we're going to do is we're going to say, remember we kind of said that cash greater than the stock or the position. We're going to come in here and right click on this, create closing order, and then say sell. Now, if I kind of gave feedback on this and said, hey, could we have made more? maybe the gains were bigger, but we're selling in trend 4. The timing of the exit is in the second or third day of the red lines on the moving averages. Timing is decent. Could have been better. Okay? Note the credit back, and then you're going to see the commission. We're going to send the order. Now, here's the thing. So first off, I'm not going to do this, but when we look at EWC, that is also trend 5. Now, what does that tell us again? If I pulled up the chart, what is that going to look like? That's going to be priced down below the moving average. And if we're below the moving average, is that something you want to own? Does that sound like a great opportunity? Geez, what I really like for Christmas is a stock below the moving average. Maybe not. So as we have time here, I'm going to right click on the EWC and sell that position. Okay, I'm going to sell it. Now, if I went to one that I'm also a little concerned about, MO, if we kind of said, what is a trend that's a little later? It's really Mo. Okay. And if I showed an example of this, what you're going to see if I look at MO, we're also going to notice that when we look at MO, how is our timing on selling? So we already know we're in trouble. Now, I'm going to repeat this, okay? If we're talking about, man, we nailed the exit, trend 4. We didn't go to the target. We're not at resistance, and maybe the stock is falling back, and now I'm losing momentum. That's 5. If now I'm looking at a position where it's trend 1, like Mo is, I'm thinking, we're late. We're late, okay? And how do I know I'm late to even further confirm that? Well, the number of days that the moving average has been down is 8 and 7 days respectively. Do you realize that's almost 2 weeks of time? Nobody is that busy where for 2 weeks they couldn't pull up their phone, iPad, or computer and see that they're almost 2 weeks late, okay? Now, when I pull up this chart, if we're that late, it's probably going to tell me that we're probably losing some, okay? Because if I was in trend 4, that's probably where I had some more money because the stock was up near the target and or resistance. If we got trend 5, I sure hope we have some money left. And if we all of a sudden get trend number 1, there's a really good chance I'm losing money now. So here's the deal. Now, why don't people sell? Because they want to get to what? I'll tell you what they want to get to. As soon as I break even, I swear I'll get out. Please let me get to break even. I know this guy in the webcast talked about sell signals, but I don't want to take a loss. I want to get to break even. Okay? So now you got to ask yourself, you're a technician or are you just a hopist? Okay? Are you just hoping that they go back to break even? Now, the biggest thing is when I pull this up on the chart and look at MO, you're now going to notice, oh my gosh, it's horrible. Okay? Now let's kind of take this one step at a time. Can you see it? Okay? Now, if I look at this, what you're now going to see is we're just going to kind of take it a day at a time. And there you see that all of a sudden the 10-period moving average, red, strike 1. The moving average crosses over, strike 2. And the 20-period moving average, which we've been hammering for the last 19 minutes, what you're going to see is red again. Strike 3. Now, the question is always, well, how do you know it's really going to pull back? You don't. You don't know the future. You can't see beyond the right edge. But if you kind of went back and look at many charts over many years, that typically is not a condition that is conducive to making gains. It's typically conducive of losing momentum and falling trend, okay? When the price is down below both moving averages, that's usually not a recipe for having your portfolio grow. So the investor might have said, sell, okay? Now, we go back to the very next day. Well, maybe it's going to go back up. It's a good company. You ever heard that before? You need to realize something. You are not the lawyer for the company. You're not the attorney for the company. You're not a marketing specialist for the company. You're not employed by the company, okay? You're an investor. If those trends are not in your favor, you are saying, I don't want to be in, okay? Realize that? Now, if you go back and look at this trend, what part of that red color of the moving averages, red color shading, did we not understand? And so the moral of the story, and by the way, James, don't beat me up. Okay, all of us have done things that were like, that was just not bright. Okay, and by the way, you could have a PhD, MBA, CPA, CFA, you can have all of it and do things that aren't very bright. Okay, so the moral of the story is we're trying to align our signals with what we did. So if I look at this and said, hey, how would you grade that exit? We would say it's like a D minus F. Okay, why is that? Because we sold it in trend number one. When we confirm how long were those moving averages down, they were flat out. They were just, it wasn't the first 1, 2, 3 days. We're literally 7 or 8 days in, which by the way is almost 2 weeks. Okay, you could have went on a cruise for 2 weeks to the Greek islands. Okay, that's how long that someone wasn't paying attention. Now, what we're going to do is, now, James, I don't want to sell and take and loss. Look, more of the story is, what is more important? If that stock is below the moving averages, are you willing to take a small loss, or would you rather take potentially a big loss? I don't like it when you phrase it like that. Okay? Tough. Doesn't matter what we like. Matters what the signal's showing. Okay? Create closing order, sell. Now, when we do this, what we're trying to do is we're saying we would rather have the cash back than be in a position that's not conducive for bullish momentum and bullish trend. Confirm send. Notice we're going to do that. We're going to send that. Send. Now, what I want to kind of do is kind of speak to just real quick. Well, let's kind of talk about maybe James, you talk about selling. Let's kind of talk about something. Well, how do I know maybe I should continue to ride the trend? Well, if we're talking about that it's a new bullish trend, that's trend 2. That's price above the 10-day moving average, not the 20 yet. Okay, so it's early. Okay, now if we get trend 3, okay, this is when we're above that P for price, and you're going to see that we're above the 20 and 30. Now, this is when the investor tends to be the happiest, because all of a sudden they're like, man, I am so smart. And all of a sudden I just see bull flag, bull flag, bull flag, bull flag, bull flag. Everything looks like a bull flag. I love bull flags, the investor says. So right here, the investor is thinking, if this keeps going, I might be done. Okay? Now, we don't always continue that forever, and that's why we start to get into number 4 sometimes if it goes there. Okay? Now, by the way, I want to bring up a nuance. Do we always go to 4? No. If that trend all of a sudden just drops down all of a sudden, you can go from a 3 to 5 and never even get a resistance. But that typically means you've had some news or something like that that kind of crashed the stock down quickly. Now, let's bring up an example of Microsoft for just a sec. Now, what's the trend? Trend 3. So, everyone has limited time to some degree. If we were trying to say, which ones am I going to look at first? Easy. 4s, I'm going to look at first. 5, I'm going to look at second. And 1s, we're going to look at third. Okay? But we're going to look at all of them. Okay? The goal is to try to sell into the targets. Okay? Adjust the stops. Find the stocks that are starting to slip down. And then deal with the ones that are trend number 1. Just like we did. Okay? Now when I'm looking at, let's say, stocks that are trend 3, why are we not as focused on those? It's not that we don't care. It's just those are still trending. We're trying to deal with things that are more time sensitive. Okay? So if I go look at, let's say, Microsoft, we see trend 3, and we've been up for 13 days on that, on the moving average, and 12 days on the 20. Hallelujah. Okay. Now, if I go pull up this chart and say, what is it showing us? The investor then says, can I get like 10 of these? Okay. And I know how you feel. Okay. But this is where the investor says, now this is what I like. The goal of the investor is they're trying to get these where the price is above the 10 and the 20 maybe, and those moving average lines are green. Do you get it? I'm going to tell you something. I invested on my own for 7 years. I think I went 7 years and I never got it. I never had a coach. We didn't have any webcasts back then. We were on blasted dial-up, okay? I'm going to tell you, it's possible to go for years of this and never really get it, okay? Now, my goal here today is I'm going to kind of try to push this and massage it in your brain so it sticks, okay? So Microsoft, we would say, let her run, okay? Let that little filly run because she's still running. Now, if I look at, let's say, Apple, which is also trend 3, oh my gosh, 25 days of that green line on the moving average there. Let's pull that one up. Well, if I look at Apple, is that really 25 days? Oh my gosh, probably it is. And if you look at this, the last time it was, okay, the last time we went from red to green, it was all the way back here in 1959. No, it wasn't, but it felt like it was 1959, okay? And you're going to see that if someone took an entry right there, they've been riding that pony all the way up the hill, okay? Now, where's the 20-period moving average? Where did that turn and give us more confirmation? There, but nevertheless, it's been up about 21 days in a row, okay? So moral of the story is, and I want to kind of go back and kind of mention something. Let's say the investor, why don't people sell? I don't think anything that I talked about is PhD level material. Like you have to have, like, be super bright to understand what I said. I think you could review it and say, James, I could practice that. I think the number one reason why people don't sell is they don't know when to get back in. Fair? Okay. So if we sell, for example, up here, if these lines are red, there's nothing. Okay? There's nothing. The price, sellers are still in control. 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 There's nothing. Okay? Now, if that price is just going down like that, the first signs of any buying at all, any, would just be that 10-period moving average goes green. Put a little check mark there. So someone said, hey, is it maybe an interesting time to get in? Well, if you want a more aggressive entry, right on about the 7th, that would have been the day or right around there. If someone says, I like to see a little bit more confirmation, like a moving average cross, strike 2 to the good side, that would have been like the 9th, okay? That's kind of more confirmation. So if someone said, James, I got out right here, when am I going to get back in? Your previous entry is going to be the same entry going forward. It doesn't change, okay? Now, what you're going to see is if we go forward and say, where was that kind of where the 20-period moving average went green? It was on the date of the 12th. Okay? And it was right there. So let me kind of mark 1. Remember, I only count to 3, so you got to pay attention. 2. Okay? 3. And you're going to see that if someone said aggressive, give me some more confirmation. I want more confirmation. And when you get that both lines green again, that's when the investor's taking the entry. What is probably the number one reason why someone doesn't take their entry? Well, they're not comfortable with how much money they're going to risk. Okay? That's why. And if that's you, you got to solve it. I mean, how much longer is it going to take? If you say, I don't know, then start with a very small amount. You might even say, James, I'm going to even risk 1/4%. Okay? 1/3 of 1%. Half of 1%. It's okay to start small. That's what the paper money account's for. Practice small. It's not about how much money you made at first. Can you execute what you see? That's the most important part, okay? Now, what I want to do is I want to also go back to, you might be thinking, well, James, I don't trade off daily charts. Fine, okay? No one's saying you had to, okay? So this over here, this is really looking at daily time frames. So if you said, James, I'm like a trader. I like to trade daily. Now, if you asked me and said, James, what do you like? I know what I like. I like daily too. But first off, you got to realize that weekly trends are also important too, okay? I mean, let's not kid ourselves, okay? Now, so what I want to kind of do is before we go to that weekly side and kind of talk about that for just a moment, if you said, James, I do not have the 10 hole, just a quick reminder that if you go right to my X page, okay, you will see that that script right there, 10-day hole label counter is right there. 20-day hole label counter is right there, okay? Now, I will also point out something to you, okay? Now, here's the thing. What we're really trying to do here today is I think we focus a lot of time on entering, and that's not bad. That's part of it. But today I want to make sure if we feel like we're stronger on entries than exits, I want to make sure we kind of get some time to bring it up where we're kind of more equal in those, okay? Now, if you said, James, I would also like that 10-day hole label counter on the chart. So that way I can see with my own eyes kind of the timing of these exits. I want to give these to you. Now, I can't physically give you Christmas gifts, okay? So I want to give you an X or a Twitter gift, and I want to give you these scripts, okay? Now, let me kind of first off just go to this. Let me send you first this 10-hole counter. Now, you might be thinking, well, what am I supposed to do with it? I want you to practice timing on your selling, okay? So if you said, James, I feel like I'm a day late, dollar short, and I'm always late. And I kind of always joke the only time that some people are going to be on time in their life is at their own funeral. They'll be the first ones there. Some of you get that later. So the biggest thing is that's not the only time that we want to be on time, okay? So the biggest thing is when I do the second one, you're going to see that's the 20-hole counter, okay? So let me repeat something just real quick. If we see that these are both still green, there's still momentum, the 10 column, and there's still a trend. But if I start to see like on this one, it's 5, red, let me back up. If it's red, and if it's red, we know we're in trouble, okay? If these lines go red, then all of a sudden we're probably not a 3 anymore. We're not a 2 anymore. We're losing momentum and we're giving back trend. If I go look at ALB and I say red, red, okay, then that kind of tells me we're probably at least a 5, and if it's gone down quite a bit, it's probably a 1, okay? Do you get it? I need to know in the chat, do you get it? This is a come to James meeting today, okay? Because I think if you understand what these are and how they're related to each other, right? If we get the moving averages red and the price is starting to drop, then it's going to change the trend. So both of these are kind of telling us something about potentially entering, staying in the trend, or maybe considering exiting, okay? Now, I want to also go back to the chart for just a moment. If you said, James, I would kind of like to see it labeled on the chart for me. This chart, let me share with you this chart for just a second. I want to make sure it comes up okay. This is a nice chart because it's labeling for us on the graph, and I just brought it up myself. So if I went back and said, hey, where did it kind of show us red? It's labeling the red candles for us, or it's labeling, I should say, the number of days that the moving average has been down. And this is just labeling the first day that the moving average went green, the second day the moving average went green, third, fourth, fifth, sixth, and obviously by 8 or 9, you're thinking, why did I get in? I mean, that's kind of what a lot of people think. So this is kind of showing, now by the way, could you label the 20? You could, but I'm just labeling the 10 because that's kind of the signal that we could talk about, okay? Now, so let me share that with you, okay, as well. So what I just sent to you is a chart, okay? So setup, open shared item, and I'm going to copy and paste. So the first Christmas present I wanted to give you here today is the trend script, okay? That's the first script. It's to Wiley from James, okay? The second present I gave to Dean, okay, is really the 10-hole counter and the 20-hole counter, okay? That's the little present to Dean. Now, I want to give to Don the chart that even will label that, okay, to Don from James, and that's going to label kind of the counter right on the chart. And I think it's helpful, okay, because it's showing you the turns, okay, red, green, and it's labeling. Any investor that knows what they're doing, they're typically trying to get in the first 3 days, and it labels that, okay? Now, I want to go over to this just real quick. We know that not all investors are, for example, day traders. And when I say day traders, I don't want you to think we're talking about they're just trading buy and sell in one day. But maybe they say, James, I don't really focus on 2 to 3 days to maybe 2 to 3 weeks. I like to look at weekly charts. I'm trying to capture those longer term trends. Now, I know how you feel. I mean, I've been married to Amber for a long time, right? And we're still in that Fibonacci extension of the 423, and it just keeps going. So I know how you feel. So I wanted to put this here, okay? So if you said, James, I am a longer term investor, could we take what we talked about with trend and now just apply to, let's say, a weekly time frame? You sure could. Could we also take what we talked about with the 10 haul and the 20 haul, and could we just apply it to a weekly chart? We sure could. Now, what I'm going to do is let's kind of talk about this, and I'm going to kind of go to just real quick a different stock for just a moment, okay? If we said, for example, and I'll give it to you in just a moment, I'm handing out Christmas gifts. Some of you said, I want James to be Santa Claus this year. James ain't getting in that suit, okay? It ain't going to happen, okay? If I am, it better be for a lot of money. Here we go. Now, I want to take a look at, if I ask you, if you were trading on the weekly charts, which stock would you look at first? Now, I said we like to look at 4 first because maybe those stocks are up at resistance and or targets. We don't have a number 4. Do we have a 5? Do we have a stock that's starting to slip down below moving average? We don't have that. 1? Yeah, we have a number 1 here. Now, what does that kind of tell us? It tells us that the trend is below both moving averages of the 10 and the 20. And I want to know the severity or the length of time that it's been below the moving averages. Well, if we answer the question like, well, for the 10 period, it's been 7 days, check and verify. And for the 20 period moving average, it's been 2 weeks. Now notice, this is week. So when it says 7, this is saying for 7 weeks. Weeks, not days. Okay? 2 weeks. Okay, now, if we said, well, James, I want to sell when we get into trend 1, this is a candidate. If we're talking about the timing of selling, there's been literally the last 2 weeks, ExxonMobil has been showing potential sell signals. Do you get it? Okay? Now, here's the deal. If the moving averages start to go red, then they probably changing the trend. Okay? They play off each other. So why not you just use the trend weekly or the trend daily? Well, because I like to get the counter to see kind of the timing of how long has it been down? How long has it been up? Okay, that's why. Okay, now let's pull up this chart and kind of see what do we have. Well, when we look at the XOM, let's kind of show this. So if I were to look at this chart, how did I, now people will say things like, I didn't know when to sell. Well, this is kind of where it kind of becomes more obvious, right? So what part of this did we not understand? Okay. So if I said, hey, James, I got the 10 period moving average. Okay. The 10 is the one that's closest to the current price there. The 20 period moving average. Okay. So we knew we were in trouble by about right there. Fair? Because we had a negative moving average crossover. The 10 period moving average line was red. The 20 period moving average was red. And even on the candles, it was labeling for us. Red candle number 1, James. Red candle number 2. Red candle number 3, 4, 5, 6, dong, dong, ringing my bell and saying, what are you doing? Right? So by now, we know we're in trouble. And so the color of the moving averages is trying to tell you that. The shading of the moving average is trying to tell you that. And the R stands for red, okay? And then it's telling you that. And then the length of time is also telling you that. And the monitor, if you said, I didn't look at the chart, I was just looking at my positions, we know we're in trouble. Trend 1, trouble. And then we know we're in trouble. Moving averages are red. And the higher the numbers in the boxes, the more that we are proving that we're not paying attention. Fair? Okay. Now, I know sometimes people like to hear things they want to hear. Sometimes you don't need to hear that. You need to hear the dang truth. And if we had something that showed 20 weeks and 15 weeks and someone says, should I sell? They never had any exit signal. They wouldn't be asking that question if it was that deep into the selling. Okay. So the moral of this story, luckily, what type of position do we have? Well, we have long stock, but we have a caller on the position. Short the call, long the put. Hallelujah! Because that protection has made more money than what the stock is down, thus leaving us with a little bit of a credit left. Okay, now, if the investor said, and I want to prove understanding. So if the investor said, James, I am going to sell when the trend is number 4, potentially, if they want to sell up near target resistance. If they said, I want to for sure sell, potentially, trend 5, because now we're losing momentum, and now the trend is in question. But if it goes 1, man, we've lost momentum, we're losing, we've lost the trend, and all of a sudden, I want to sell that position. Now, does that mean that we can never get back in? That's not true at all, okay? Now, you need to understand something. Sometimes you can exit out of a position, and a week or 2 later, it shows a reentry. But the answer is we don't know that, and the investor's number 1 job is to protect the king, to protect the queen, to protect the capital. Because whose capital is it? It's yours, okay? Now, I'm going to create closing order. I'm going to buy that. I'm going to exit this position, confirm send, note the commission, send. And to approve the application, I want to make sure this fills. I will put it to a market order just so we can see it fill, okay? And then once that fills, I'm then going to go in and sell the shares of stock, okay? Now, here's kind of my point of view, okay? I think sometimes people want to know when to consider selling, but when they see selling, I wonder if they're really going to do it. I wonder if it was kind of just more of a theoretical exercise, or was it really like, no, I want to know when to consider selling because I'm going to practice the selling like I do the buying. Okay, fine. If that's that person, okay, let's see how it works now. This is what paper money account's for. We're then going to go right click, create closing order, sell those shares, confirm and send. Not a commission, cost of the trade. We're going to get the capital back, not a commission, send the order. So now if I was trading the trend, this class trading the trend, and I said, are there any other stocks that are concerning us? Now remember, I'm busy. I got lots of things to do, whatever. Well, the trends are still 3s. The trends are still 3s. Okay, and if I look at these are still strong. These are still strong. These are still strong. And when I look at that, how long did that take me? Not very long. Now, you got to remember something. When we talk about scripts, they're not guaranteed for accuracy or timing. Said that 3 times. We want to verify that. But if I said, look, I don't have a ton of time, we could use the monitor tab to really help us see that a lot more quickly. Now, let me do this. I got to do this quickly and wrap it up, okay? And what I'm going to do is I'm going to send out the trend weekly, okay? That's the trend weekly. And this one, the second one I'm sending out to you is also the trend, okay? The 10-week, okay? That 10 whole counter weekly. And last but not least, I'm going to send this one out to you, which is the 20, okay? And last but not least, as we wrap up here, okay? Send it there. All right. Now, I'm out of time. Okay? Guys and gals, I think this is not just I went to that class and I'm done. I would really recommend you go back and listen to this think to yourself of how are you making your buying and sell decisions easier and more systematic. So your homework assignment is to go out and practice what we talked about. And can you prove proficiency? Now stay tuned for our next webcast coming up right at the top of the hour. If this has helped, let me know in the chat. Also remember that what we discussed here today was done for example, illustrative purposes only. And also remember that all investing involves risk. And this has been the class on Trading the Trend. Have a great day. Take care. And we'll see you back soon. Stay tuned for our next webcast coming up next.